And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live on Channels Television. Thank God it's Friday edition. I'm Ladi Williams. Today we'll be looking at the trading the murky waters as inflation rages and central bankers stay hawkish. And we'll also be talking about boosting Nigeria's non-oil exports. And we'll take a look at the price of Bitcoin, still lagging behind at this point. But first, let's look at the oil market. We see oil prices edge lower today as demand concerns emerge following interest rate hikes in the week. Although new sanctions on Iran capped the downside. Brent crude futures fell 47 cents to $119.34 a barrel, while the U.S. West Texas Intermediate crude futures fell to $117 a barrel. That's down about 57 cents. If losses hold through the day, Brent crude futures would post their first weekly dip in 5 weeks, while the U.S. crude futures would see their first dip in about 8 weeks. And back here, the National Pension Commission says verification and enrollment exercise for retirees and prospective retirees of federal government Treasury-funded ministries, departments, and agencies will commence on Monday, June the 20th. The Commission made this known in a statement, adding that the exercise targets federal government employees set to retire in 2022 and those who missed the enrollment in previous years. The Commission asked retirees and prospective retirees to visit their pension fund administrators to undergo the data recapture as the exercise is scheduled to end on August the 31st. And the Director General of the National Biotechnology Development Agency, Professor Abdullahi Mustafa, has been speaking on the benefits of the passage of its act to the nation's economy. Speaking with reporters in Abuja, Professor Mustafa adds that the new legislation will back the agency in its research for agric biotechnology, which aims at boosting agric production, job creation, foreign exchange earnings for the government. Do take a listen.
I'm pleased to inform you, in line with Mr. President's vision to make agriculture the mainstay of Nigeria's economy, the agency has conducted researches that will make our agricultural yield competitive in the global market. Furthermore, the agency, through its research activities, is leapfrogging Nigeria's dairy industry and working on how to improve livestock genetics. This is aimed at ensuring our indigenous cattle increase their milk and beef production capacity. This will come with many advantages and addresses economic impact of dairy industry ranging from employment opportunity to increasing the nation's GDP. Also, the agency has helped to meet critical needs in Nigeria by identifying indigenous bacteria as starter culture for yogurt and other dairy uses. In addition, the thermal-resistant yeast was found for bioethanol production, bakery, and other food beverages.
And now to our first conversation. Expanding non-oil exports remain the matter of strategic economic importance, requiring continual intervention. We see the impact of the pandemic on oil demand and, by extension, the price of crude oil in the international commodities market further exposed Nigeria's over-dependency on crude oil earnings and its susceptibility to oil-related vagaries. Well, let's get a sense of the prospects and challenges of non-oil export. We have Ms. Bosun Sholari, Chairman, LCCI Export Group, join us right here on the program. Great to have you. Good morning.
Good morning.
Great to have you join us this Friday morning. But please, can you paint a picture of the current state of non-oil exports in Nigeria? Because that conversation has been going on for a while now.
Thank you so much. Let me first start by acknowledging and thanking the NEPC so much. Because without them, the feat we have recorded wouldn't have been so. And so it's for me, on behalf of exporters, especially the MSMEs, to say a big thank you to NEPC, especially the new CEO, who came from the rank and understood what we go through. And this man has done so much. And then, like we say, if all agencies of government will work like NEPC, most of these problems will be surmounted. So, and then having said that, let me first start with the challenges. MSMEs form over 90% of the non-oil exporters, especially with the intervention of Mr. Vice President 2 years ago for COVID relief. Many of them registered their businesses with NAFDA. And that's why you're seeing so many things now in the market, and then you wonder, can these things come from Nigeria? But of course it can come, but you know we have challenges with raising funds. And so when he made sure that with less than 8,000, most of us could register 5 products. And then that's why so many products are there. But you will now think of rejects, because I need to just tell you this few story. Rejects in the international market. Most of government agencies that should help us have even become, in quotes, our enemies. You find NAFDAC over-regulating like the vice president will say. You see some activities being duplicated with NAFDAC. And most of these agencies believe I've had to register just one more product with 5 that I registered during COVID palliative. And it took me 90,000. And I tell NAFDAC, they believe once you register your product, you're going to be carrying dollars in Ghana must go. And that is not it. Because most of these agencies don't even want to know there is a global warming. The economy of so many of the countries are so bad. You see what we're facing in Nigeria that people can hardly eat. So many people have not sold a dime this month. And then government agencies, all they want is get. For instance, I'm looking at it. Why can't NAFDAC raise donor funding and help entrepreneurs to get certified? And then when it is difficult to get certified, people will cut corners. And that's why they keep carrying things through back door. They bribe their way, and then they get there, they are rejected. And we're destroying the image of this nation, not knowing that we're affecting all ourselves. So for me, let all the government agencies have a human face. I call NEPC exporters friend, and that is the truth. I will always say it anywhere. Okay. They help exporters, and most of the agencies should do that. Now, coming back to your question.
Right.
There's no way. Oil, we have all seen what oil has. Yesterday, they have said CBN says they paid over 3 billion as incentive. To how many people? Until CBN will look at what they did for the agri sector, AXMIS loan, and deliberately pay attention to exporters, small exporters, so that they too can move up to the level agri people moved up to, except for this insecurity that has brought that down. But intervention was quite good for the agri sector. There's this mantra now that NEPC launched, exports for survival. If everybody does not sit down to help, we may not get there. Paying 3 billion is not it. Get some of this funding, help exporters get this standardization and certification. The minimum is ASI. Team up with NEPC has done that for over 100 people, free. They have helped people to pay for FDA, free. And then more of our things are going up. And that's where you are seeing some monies coming in. Until we do this, and I said something. I said, let us do like what they did for the security sector.
Right.
Launch an export trust.
Okay.
So that
all right. Okay, Ms. Solari, looking at the AFCFTA, that's the Africa Continental Free Trade Agreement, that's been signed, for a while now. How do you see it impacting, Nigeria's non-oil export drive?
I will say COVID delayed after. But I know as at about 3 weeks ago, Morocco joined, about to ratify, or if they have ratified, and they are hopeful that many more will ratify, and then we are also hopeful by maybe first quarter of next year it will start. But you see, the issue is, if we don't solve our issues, especially logistics has been one of them. Because if you want to take anything to Ghana, it will take you 7 working days. How are we going to compete? It's so expensive. So CBN and the government need to look at the area of logistics. Why are they not calling a conference of this logistics company, begin to prepare some of them towards that activity? Because otherwise, we will be a dumping ground. After is what I want to talk about. But if we're not fully ready, if our industries are not fully ready, and one of the things I will enjoy those who are listening today to do, especially CBN, if they're going to fund anything, you can help fund dehydrators, millers, and filling machines. By the time you do that, you would have taken a lot of bulk and problems off the neck of exporters, and then we can fully go on this journey to say we can't continue to trade in our commodities. Do you even know what's happening now? Because some of these countries are enjoying our commodities, they don't want to buy our finished products. They keep giving excuses. But if we have our ASIP label there, maybe that will make them believe in us more, that we have been able to go through a third-party certification. Unless we do all that, we're still playing. And then this noise, we're looking for 200 billion FX or whatever yearly, may just be a mirage.
Wow, right. I saw the central bank governor actually talked about the role, the Ports Authority actually play, in all of this, helping, boost the non-oil export diversification. What kind of regulation would you like to see, coming from the ports?
From the port, of course, all this delay cannot help anybody. Okay, you have those who are still trading in commodities that form bulk of the traders now. Their goods won't get to the port in 1 month, 2 months. Which importer is going to wait for all that? So one, like the Lagos State is doing, and then every agency must come together. Of course, I'm sorry, the military, paramilitary are on the road. They said they were checking that, and I went through that corridor not too long. They came down. But we need to pay a holistic approach to it to make sure. They have also dedicated Lily Pond to the export terminal, which is also good. But we still need to check, number one, these guys on the road, before these containers get to the port, they will stop them. This local government will collect this one. These are all the approaches we need to put in place and checkmate all this. And that has to do with bulk of the things is from Lagos State because of the local government. These guys lining up the road and won't allow these people to go. That's also one of the issues. So all these things, it's not just one agency. We need to look at every agency, every state, every local government that has to do with the passage of those goods when it gets to NPA. Because if NPA is ready, the road is not ready. These things will still happen. And then you keep seeing rejects because importers will cancel the export. And then we also know that we have packaged these things, these materials inside a container. Are we looking at the lifespan? It gets there and that one will reject it. Who pays? People are losing money, seriously, and people are dying because they cannot pay back. So these are some of the areas that they need to also look at. It's a whole lot of problems within the way. And then are we even looking at the materials where it's coming from? When farmers cannot, I am a farmer. I have not gone to my farm since February last year. Ask me why. I don't want to be kidnapped. Right. Because I don't have people who will pay ransom for me. And then I have people going to the farm. Then they tell me last year, I had so much to harvest in plantain. And they said before they got there, some people have gotten there and they have harvested all. I also have a guy who will come and my cassava and my corn will carry his cow there and eat everything as we do. They feed on it. But let me also say, we know the menace of herdsmen are much, but some of our people, especially in the West there, are contributing to it. Most of those people who own those cows are the locals, the ballers, the chiefs, some politicians. It's the way they get Megad from Niger, from the north, to come and help them look at their house, that they also get those guys to come and tend to their cows. And then when you're doing that business, why are you not getting a place where they will feed from? But you allow these guys, because you share the offspring with them, you allow these guys to take those things into people's farm. One day I saw this guy, and I said, "Kai, can you look at me? Will you allow me, a woman at my age, to suffer, and then you come and feed on this?" Because I could muster some Hausa language, because I'm from Shagamu. My farm is in Ogun State. And this guy said, "Oh, Mama, yeah, Kuri, I no go come here again." And afterwards, what has he done? Everything we have planted this year, they have eaten it up. So we keep looking at food is expensive. We can't even feed. Food security is a problem in Nigeria because of these things, because you can't go to the farm. You are afraid of being kidnapped. Some people are there. People rearing cows.
Quite a number of issues. Quite a number of issues there. But, still looking at the issues with the port, I've heard that some of the exporters have had to, take some of their goods through neighboring countries like Accra and Benin Republic. How's that actually working out?
Exactly, because what they do is that maybe some of those vehicles could go in the night, and then they will have up. Although that road too is bad, because I plant rice in Badagry, you have over 100 checkpoints on the way. After NSAS, it came down, but they have started. And then people are paying. You saw the transporters protesting last week or 2 weeks ago. You have all those things on that axis. In fact, before you even cross the border, immigration is doing their own. They will collect from everybody. When are we going to leave this place? We must develop this country. I tell people, the fact that you receive salaries and then you know you are gainfully employed does not mean everything is well with you. Because when the chips are down, your salary will not be able to save you, because all of us will be under this insecurity that's about to blow up. So the truth is that when people cannot get to the port, they will look for how to do their business. And that's why people are, it's more expensive. And then how they compare, but they are lucky because they are doing commodities where they see more money. If you do value addition, you can't do that, because if you do that one, then your prices will be out of this one. And it is value addition, processed finished goods that can save this country, not this commodity we're doing. Because these people there want to keep us selling our commodities so that we'll keep collecting, and then they can dictate the price and reject it when they want. So the answer is finished products, and our government must be ready to actually follow up the mantra of NEPC, export for survival.
Right, and it's all about export promotion right now. But what kind of investments do you think we can see from the private sector to actually help in all of this?
Yes, I just said most private sectors, if I go and see now the queues for FX, there are people who need these things. So don't leave those who are generating it to suffer it. That's why I said whether there should be a trust fund for exports, so that this trust fund can be given out at 5% interest rate. You go to the bank, they tell you it's shareholders' funds. You come and give me that money at 25% or 15%, as we call it. At the end of the day, because labor is expensive, there's no energy. You have to be your government and coal. You provide diesel is almost going to 800 naira. How will people survive? So we need, in fact, if it is not a grant like NEPC is doing, then give it to us at 5%. People are ready to pay this money, but outside there is so volatile and so unencouraging. So we cannot continue. That's why so many things are happening. So we need to do a trust fund for export before we can achieve all these things we're talking about.
Right, and looking at where we are, right now, what responsibility do you see for the next government, that's going to come in? What would you like to see from them, in boosting this non-oil export?
I hope everybody will be sincere to what they are all saying, because the society has been dollarized and nairalized, and I hope we will have where they are complaining that this government is taking too much loans. I hope by the time we have used all the money to bribe delegates and bribe voters, we will have enough money for what we are saying. And I just hope Nigeria will not die in their time. So they need to listen to some of these things and follow through. And I hope whether APC gets there or PDP, they must just follow what the government has done. Because if you want to start again, you bring us back to the Stone Age. So whoever is going to do it, the key to survival, if our balance of trade cannot balance, we keep recording negative every time. I went to Botswana, a small country of 2.4 million. Their exchange rate is 11.7 to a dollar, a small country of 2.4. You cannot spend dollar anyhow in Botswana. You have to go to a bureau de change. They will collect your passport, collect everything. I went for a Pan-African Chamber of Commerce conference. I'm a member of Lagos Chamber of Commerce and Industry, the chairman of the export group. And that's what is happening in that small country. So why can't we help ourselves? Because everybody is going after importation. Even the more we have tried, some people will still tell you, Nigerian goods are not good. When are we going to come out of this? Are we trying to kill this country because we must buy and take labor to other countries, and our people are not employed, and we're blaming the government every day? We're not seeing how we are contributing to it. We will go and import toothpick. Is it not to just pick this thing? It is well with us.
Right, so much to unpack there, but it has come to that point where we need to substitute. At this point, it can be business as usual going forward. Thank you so much.
We must be disciplined.
Yeah. Yes. And buy Nigeria. Buy Nigeria. All right, thank you so much. This is Bosun Sholari, the chairman, LCCI Export Group. It was great having you on the program today. Thank you so much.
Thank you. All right, so enjoy your day.
All right. So up next, we look at navigating the murky waters of these markets. We're seeing markets ravaged all over the world, and we're seeing also back here a market not looking so good, but still quite bullish at this point. We're drilling down on all of that next. Do stay with us. This is Business Morning. Now to our next conversation. With the battle against inflation raging as central bankers raise rates globally, it seems no market is safe as the sell-off in risk assets intensify in 2022. Let's take a look at how investors have fared as we approach the end of the first half of 2022 and get an outlook for how the second half will actually look. We have Ayodele Ebo, MD CBO Optimus by AfriInvest, joining us right here. Great to have you on the program.
Good morning, Ladi. Thanks for having me.
Yeah, so as we approach the end of the first half of 2022, can we have your thoughts on, major highlights in the financial market, both globally and in the domestic space?
Okay, thanks. We've had a series of very strong activities. So if we look at it even from the global space, the Russia-Ukraine war was caused a lot of disequilibrium in the economy, both globally, though we didn't feel much impact locally in terms of our financial markets. So you would see that led to a significant rise in energy prices, which is hitting hard on across economies. You would see even the price of oil in the United States rose to as high as over $5 per gallon, which is very significant compared to what it was this time last year. We've also been seeing the series of rate hikes from the Bank of England as well as the US Fed. We saw the major increase this week, about 75 basis points, and also Bank of England following yesterday with about 50 basis points. They started in December. So you would see that has caused a lot of sell-offs within the equities market. The market dipped significantly. Even the S&P dipped by about 3% also yesterday. So there's been a lot of uncertainty going around within the global space, which is also with the hike we are seeing within the developed economy. Which we feel that also the ECB is also, that's the European Central Bank, would also follow suit. It's making emerging and frontier market instruments unattractive because of the attractive or better interest rates they'll be getting in their country. That's also impacted on the crypto market because of the reduction in amount of money in circulation as a result of the rate hike and the winding down of the quantitative easing. And now coming home, you would also observe that, yes, when you look at our market, it's been a bit dissociated from the global space, but we saw our monetary policy committee increase our rate by about 1.5%. Which is very significant, so 13%. Though we're expecting that we'll see that major rise in interest rate, but we are yet to see that corresponding reaction in the fixed income market. So by and large, we believe that yes, several activities that are more negative than positive occurred within the global space as well as the financial market. So far in the first half of the year that is wrapping up. And a lot of investors have a lot of stories to tell based on
quite a number of Quite a number of stories, because if you were able to maybe sell off, maybe in January, the beginning of this year, you'd be, smiling, at this point. But a lot of investors have held all the way from the highs to now. And looking at the crypto market, the global equities market, all of them have had incredible drops, up to this moment. Some investors are still holding. Do you think now is a good time to start scaling out, or is it better to just hold on and maybe hope for some turnaround at some point?
Okay, thanks. And very valid comments there. So what I would propose, if you have not exited the market, because I also know a lot of traders that shorted the market, they sold off with the plan of buying back. So, but if you are still in the market, if you are where you were comfortable to go in when prices were high, then you shouldn't be bothered coming in at these low prices. So what you see, this is always a cycle. You would see that stocks that have very strong fundamentals, they present opportunities when there are volatilities or when they are challenging period. Yes, it's been projected that the U.S. economy will go into recession, but it's an economy cycle. So from the recession, there will also be that growth and leads to boom. So if you have that long-term horizon that that you can wait for the next 2 years, this is the time to begin to come in tranches. So I won't say use all your proceeds now, but if you are able to average out throughout this period around, for those that plays the stocks, if you also want to play with invest in exchange rated fund, or for those that also invest in crypto, this is the time to buy an average. You stagger your money and buy within the next 1 year. So when market would improve, because definitely what you always see, if you check the trend in the last 50 years, the market will rebound and exit its all-time high once the dust settles.
Well, sounds like a plan there, dollar cost averaging. But now, being specific to the fixed income market in Nigeria, how has that market fared so far this year?
Yeah, thanks. Our fixed income market, Nigeria, which is currently dominated by domestic investors, and that's when the Russia-Ukraine crisis started, we didn't see significant sell-off as other economies experienced. And we also want to note that in terms of activities, it's also very limited. Our market currently, when you look at the fixed income market this year, the activity has been really very slow. And as a result, you see that price discovery would always be very challenging when there are when the activity is not as it should be. So what we've just been seeing is just pockets of transaction. Yes, some may be narrow volume. So as a result of that, that inefficiencies we're not seeing that impact on yields within the fixed income market. And that's why you can when you look at the MPR that was increased by 1.5%, you would expect that should also filter into even the bonds market. When we saw that initial reaction in the Treasury bills market, but we've seen that is already the trend is reversing. And a lot of investors, despite that we all know that government needs to borrow significantly because the budget deficit is significant, it's being projected that it may get as high as 10 trillion. But currently, it's that market, because of also the limited options around, you see the institutional investors, they still have to invest even at this low rate, both fund managers and the PFAs. So that is limiting that rise in interest rate that you see. But overall, we believe that rates has not moved as expected.
Quite interesting. The Nigerian stock market, has been one of the best performers, so far this year, even though we've seen volatility with a global market. Do you see this this trend switching anytime soon?
Okay, thanks. And the first thing that we need to note is that our market is now detaching itself from the global space, because domestic investors in the last 2 or 3 years control between 70 to 80% of activities. So as a result, when there are crises in other economies that will see significant sell-off by foreign portfolio investors in selling off, that has reduced the volatility we are seeing. However, if you do a further dive in analyzing the Nigeria Stock Exchange All Share Index, if you look at the top 4 companies, Airtel Africa, MTN, Dangote Cement, and I think maybe the Nigerian Breweries, you would discover they account for about, I think, Boa Cement rather, about 40%. So when you take this out, you see that our market is not performing as it should. So when you look at the oil and gas index, because of Seplat, the market it's rallied by about 58% year to date. You also want to look at the when you look at the banking index that accounts for over 50% of activities, that is still in the red. So by and large, the performance we are seeing in the market is skewed towards some few stocks that account for less than 20 or 30% of total activities in the market. So, but what investors that would always just recommend is that go for stocks that have been able to weather the storm, stocks that when you look at their dividend yield, at least minimum 7% over time, and they'll be consistent about it, you will still be able to at least get a bit of cash flow, pending when we believe that we begin to see that upside. Because the political risk is also a major factor to consider now. But, for most of the domestic investors, because they already understand the terrain, they know that by God's grace, the election would come and go, and activities will still move. So they are not as bothered as the foreign investors that would have exited when before election.
Right. Anyway, it's been a tough first half, for 2022. Let me have an outlook for the second half. What can we expect? Maybe a turnaround?
Okay, thanks. Starting with the fixed income market, we still feel that the market interest rates would rise. Looking at what the borrowings that we expect government to also make. With the crisis we're also seeing abroad, the foreign borrowings may not be possible this year again. So it means that would also be packed, and the government will have to borrow domestically. Beyond that, you also note that as we approach election, there's also the risk element also increase. So we believe that interest rates on fixed income will still improve. We'll continue to see more commercial papers with good rating, taking advantage of this low interest rate. And for the equities market, we may continue to see sell-offs in most of the companies, because a lot of as interest rates within the fixed income increase, the stock market becomes less attractive. That's the Nigeria stock market becomes less attractive, and as a result, prices will go down. But by and large, there's still the downside risk. Inflation is a major factor. We're also expecting that as we approach the election, the risks will also amplify. But by and large, I would say that for the equities market, investors should be cautious. Don't be very bullish on the market now. It's good to have a direction of where the economy is going, and if you have to have that long-term horizon, so that you're able to average out of the market.
All right, Mr. Ebo, we'll keep watching, and hopefully we'll have some kind of soft landing so the markets can actually breathe for the second half. Thank you so much, Mr. Ayodele Ebo, MD, CBO Optimus by AfriInvest. It was great having you on the program.
Always my pleasure. Thank you for having me.
Right, thank you. All right, now let's take a look at the markets. Now we have Ini right there with the details. Ini, last chance for a green closing today.
Well,
I don't know.
I think you just exhausted my conversation there with Mr. Ayodele Ebo, and he didn't paint a very bright picture.
Yeah.
Any of the markets.
It looks quite bleak as long as these headwinds still.
Yes, and I guess the closer we get to the elections, the more uncertainty, investor sentiment will fill the market. And if there's anything if I didn't hear anything from him, I think one thing I heard from him is that perhaps Government borrowing outside might be out for the year. But we'll wait and see if the government really will look inwards for all the funding that they need to cover up for the deficits in the budget. We'll certainly follow up on that and see how it goes. Well, let's see how the market closed yesterday. Well, you don't need to be told that. I think Mr. Ebo has already done a lot of justice to that. It was all in the red yesterday. The market was down, taking that deeper fall from the day before. The day before it was 0.61. Yesterday it ended 0.69, really getting close to 7%. I wonder how it will end today, because when we look around the world, it doesn't look like there's going to be a recovery anytime soon. Inflation is still surging. Interest rates still being hiked everywhere, from the ECB to the Federal Reserve to the UK. And MPC, I don't know if they will be able to hike the rate again when we're not done with the one we had. Well, equities was also down. Equities cap was 28.255 trillion. And then there we see the activity chart. The volume was up 211.61 million, value 2.37. The deal was much lower, went from over 5,000 it was the previous day. We see the banking has had, being battered from every side. Who will come to the aid of the banking sector? I don't know how soon that will come, especially not at this time. The only glow there from yesterday's sectoral performance was consumer goods, but very, very, very marginal, 0.01. Well, we have joining us Abdul Rashid Momo with TRW Stockbrokers. Good morning, Mr. Momo.
You can hear me?
I can hear you. Can you hear me?
Yeah, well, loud and clear.
Okay, awesome. Good morning. So the last time we spoke, you were very bullish on the market. Are you still bullish?
The last time I wasn't bullish. The last time I said the market was playing a scenario it did in 2000 and 2006, where the market went up, and when it got to about 52,000 points, it rested and came back to about 50,000 points or so. So I see the same scenario actually playing now. There's no, so far, we've been bullish from 2020 till date. And that correction needs to come. We actually, at any point in time, when there's a bull market, there'll always be a bear market. There must be a correction. That rest has come to stay for now, definitely.
What's the definition of for now, Mr. Momo?
Yeah, if I look at my chart, because I normally look at charts to what the picture I see, right? We saw a scenario where market went from about 20,000 points to about 52,000 points plus in 2006, right, to about 2007. And it got about 54,000 points and came down to about 50 or 49,000 points. Correction before we now made that all-time high in 2008. So what I'm seeing now, the same scenario seems to be playing, the same chart pattern, what we are seeing. The market has hit about 54,000 points, and it's resting now. And I feel the correction might actually be within the same scenario we are seeing in 2006, to about 50,000 points, before we can see any. But so far, the trend from 2020 to date, the support level is not broken yet. So as long as that trend is not broken, I would not say we're in a full bear market. The bulls are still there, but in the long term, that support level that tells us the market is in trouble is still far away from it. That's about 50,000 points.
Okay, so when you look at that trend you're talking about, does the first half earnings, does it make any difference?
Yeah, it's a story. In TA, right, every information is fed into open, high, low, close, and volume. So what I'm actually using the NSASI as a barometer for every sector that we're seeing. It's actually the pulse of all the combined equities quoted on the floor of the exchange. So as it is now, despite that some shares are actually hitting support levels, I can give you two. Zenith and GTB are within that level now as we speak. They need to hold, but if there's a drop within those levels, then individual stocks, you can ask, okay, these stocks are breaking support. That's why you can see that yesterday, Zenith actually traded about 17 million units. That tells you that despite the fact that when the bear market, people are still looking for areas where they can actually buy these stocks. They feel comfortable buying stocks that are within these areas. That's why you see volumes appear within such levels. So as it is now, the market, that correction is needed. And it falls into the same scenario of what's happening now. IMF, rates are high and everything. The open ILO close are able to capture those moments.
All right, Mr. Abdulrasheed Momoh, head capital markets at TRW Stockbrokers. Thank you so much. I think we're going to follow up. That's your graph and your trend, the crystal ball
I'll
you're
send
using.
it to you guys. One day to send a clear picture.
All right.
Very clear.
Okay.
Very
clear. So we'll study it also and see if really the market is going to follow exactly as it happened there. Thank you so much and have a great weekend.
Thank you.
All right.
So Ladi, I know you got some tips from Mr. Momoh, but remember to only get into fundamentally
sound stocks.
And certified stocks.
But my eyes on Zenith and GTB right now because he said they are both on support level.
I knew you would
so I'm going to be watching if they're going to break support at some point. All righty. Thank you so much.
Yeah.
All right, so after the break, we'll head out to London. Do stay with us. This is Business Morning. All right, let's head on to the UK. We have Juliana standing by right there as the squeeze continues, Juliana. So Tesco's supermarket boss is saying shoppers are buying less at the stores. I guess it's the impact of the squeeze, Juliana.
Absolutely, it is. I think there's no surprise, and we've been discussing all of this gloomy data coming out of the UK over the past couple of weeks, that bosses at Britain's largest supermarket, Tesco, are saying they're starting to see early indicators that shoppers are pulling back from luxury goods, and they're sticking to staple items like pasta and bread to get them through pretty difficult months. We had separate data yesterday released by the IFD, which is the Institute of Grocery Distribution, showing that by the end of this month, inflation in grocery retail could hit 15%, which is way above the 9% inflation, a 40-year high that we're currently living through. There was a Tesco trading update today, pretty decent trading update, showing that in the 3 months to the end of May, sales are up 2% to £13.5 billion. But bosses have attributed that mainly to their wholesale department, which is Booker's. So, of course, they're able to distribute at much lower prices. But in the brick-and-mortar stores, people are starting to feel the pinch. We did have that update from the Bank of England yesterday showing that interest rates are now going to be up 1.5%. This is to try and claw back the soaring inflation. But, of course, on the flip side of that, anybody on a non-fixed rate mortgage is going to feel the pinch. So I think this cost of living crisis, or the year of the squeeze, as you like to brand it, Laddie, is really hitting people in different ways. And, of course, it is going to affect people at the supermarket checkout, because some of those luxury goods that we know our children like to eat are going to have to only stay for Christmas and birthdays, I think, until this settles down.
Yeah, well, it's time to go back to the staples at this point. But Elon has finally met with the employees of Twitter. How did that go?
Yeah, interesting. I think we have to look at the after-hours trading update from Twitter, which was down about 1.5% to see how investors thought. I don't think it went down too well. For the first time since the Tesla boss announced that he potentially will be buying the social media platform for $44 billion, he did decide to put Twitter staff at ease by giving them a conference call. I believe there were 7,500 staff at the video call yesterday, and there were 3 main areas that he discussed, mainly staffing, content moderation and advertising. Now, with the staffing, he did say that there is going to be a reduction in headcount if he is to come on board. He tried to put some people at ease by saying if you are contributing significantly, then you don't have to worry about your job. But of course, I can imagine there are thousands of people that would be worrying today. Then, of course, he spoke about content moderation, and I think that has been where some users are a little bit uneasy about what direction the platform will be going into if Elon Musk does take over. Of course, we know that we got the shutdown of former President Donald Trump's account because of those tweets that led to the riots at Capitol Hill. Now, Elon Musk says he wants people to be able to say what they want on the Twitter platform as long as it's not illegal. That raised some eyebrows. And then, of course, he spoke about spam bots. And this is what is preventing this deal from potentially going ahead. Twitter bosses say that spam bots only account to about 5%. Elon Musk refuted that. There has been a back and forth. But then I believe a couple of weeks ago, they did release all of that data. And he does hope that the 229 million Twitter users could be increased to about 1 billion. So Twitter can rival the likes of TikTok that has been doing exceptionally well since the pandemic. So overall, it was a very broad discussion. So we'll just have to wait and see what happens at the shareholder meeting, which I believe is taking place at the beginning of August, to see whether or not the people in the boardroom are going to give this controversial takeover the green light.
The takeover saga continues with Twitter there. Thank you so much, Juliana. We'll try and see how they can get that 1 billion without those bots. Thank you so much. I will see you at 1:30.
All right, thank you.
All right, now let's look at other markets. Now we see the crypto market still looking not so good. Market cap now down about 3.56%, and we see the Fear Greed Index this morning. Fear Greed Index showing the sentiment in the market at 9 points. We got as low as 7. Not seen these levels in a long time, and now it's still extreme fear in that market. Look at that. That was about 9 points up. But look at the market cap. We see $903.05 billion right now. That's the total market cap with Bitcoin and the altcoins. That's down about 3.56%. Volume traded in the total crypto space is down 35.53% this morning. Let's look at the price of Bitcoin there now quickly. $20,904. It's down about 4.28%. Volume traded $32.99 billion. So the sell-offs actually continue with that correlation with the global equities market. All right, let's bring in Michael Inaji now, digital market analyst. Hello, Michael. Hello, Michael.
Hey, Ladi, can you hear me?
Yeah, okay, I can hear you now.
Hey,
Great
Ladi,
to have you. Yeah, I can hear you. Great to have you. Happy Friday, Michael. And you did predict this price we're seeing right now at 20K. You even said it might go even lower than that. But looking at the crypto bloodbath, it has claimed Luna, it's claimed Celsius, and now 3 Arrows Capital, the crypto hedge fund, is seems to be the next in line. How are you seeing this?
Yeah, no, this is a crazy turn of events. No one ever expected 3 Arrows Capital to blow up. They were probably the largest hedge fund in the space. They managed about $18 billion of capital at some point. And rumors were swirling in the last about, I would say, 5 to 6 days of their insolvency. Their founder, one of their co-founders, Suzu, basically didn't have any. He didn't tweet in the last 5 days. Also, as well, his co-founder as well didn't tweet for 5 days. And so people were saying that there's radio silence coming out from their camp, and people were saying it's because they were insolvent. And that the news came out that they no longer had, they were facing liquidation because they just had an extremely bullish view on the market. And also, as well, some news came to light that they were irresponsibly managing funds in terms of their total leverage. They got margin called. It was reported by the Financial Times up to $400 million. It's rumored that they owe $1 billion to all their counterparties. But this is really amazing to see the size of hedge funds blow up. Just because, in crypto, your heroes. It's always hard to see your heroes get killed. Get wiped out from, the volatility of the cycle. And so 3 Arrows Capital looks like one of the victims of this washout. But it's quite unfortunate. So, everyone thinks, the guys with $18 billion, they have to be smarter than you. They know exactly what they're doing. But it turns out they don't. They get wiped out easily as, the degenerate with 100x, leverage. So it's really crazy to see a company that has a Three Arrows Capital break down. But the more important risk is on the horizon because Three Arrows Capital provided a lot of the liquidity for a lot of these earn programs on crypto apps. So whenever you put your crypto in something like Crypto.com or Gemini, the counterparty is someone like Three Arrows Capital. They'll take the Bitcoin on books and they'll leverage trade it or use it for some kind of strategy to generate yield.
Okay.
And so when you have a company as big as 3AC blowing up, all the yield is now in question. So where
That's the contagion right there.
Question. Yeah, the contagion is the word on the street. Who's going to blow up next is the big question. So if you can make it alive crypto in the next 2 to 3 weeks as a firm, you most likely have not suffered any contagion, but we're going to see a lot of blow-ups from BlockFi, people are saying most likely next.
All right, Michael, we'll keep tracking that. But a very quick one, Michael. Which one lasts longer in the crypto market, the bull or the bear cycle? Which one lasts longer?
The bear cycle.
The bear.
Yeah,
all right, good to know, Michael. Thank you so much. Enjoy the weekend.
Thanks.
All right, that's it for the crypto market, and that's a wrap on the program today. Thank you so much, and that's it for the week also. But don't forget to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. I'm Ladi Williams. Thank you for watching, and enjoy the weekend.